So, good afternoon, Baptiste. It's a pleasure to be speaking with you again. Today, we've got together to discuss the latest financial results of two of the biggest operators in the international express and parcel sector. That is IDS, which is the parent company of Royal Mail and GLS, and also FedEx. Let's start with IDS. I suppose the first question for you would be, what were the most important aspects of the financial results for the past financial year on an overall level?
Yes, thank you, Paul. I'm glad to talk about these two results. And so if we start with EDS, at a group level, EDS showed some increase in revenue by 3.6%. So it's pretty fair. From parcel volume and revenue growth for both Royal Mail and GLS. One major insight for me when you look at the financial result is that profits is declining at some point and largely explained by GLS, that is the predominant contributor to the profit. So the profit is declining from 5.8% to 4.6%. So quite a slight margin decrease at some point. It's explained by GLS mainly because Royal Mail has a margin close to zero already. And for us, it indicates two effects. High pressure on the prices, and it's visible on the revenue per piece of GLS that have been pretty stable. And there is a 1 cent lower in 25 versus 24, so nearly the same revenue per piece. And it's definitely well known among the industry that there's quite a huge pressure on the price. On the other side, there is increased cost. But here, it sounds that there is not that much capacity for the carriers to rebalance under the increased cost on the price, because there is an intensive competition on price. Yeah.
Great, thanks for those initial insights. If we perhaps look a bit more closely at some of the geographical markets, obviously with Royal Mail, it's a question of the UK market. GLS is active in Europe and also North America. So how do you see the developments of the two different companies on a geographical basis?
Yeah, definitely. So if we talk GLS first, and the strategy to take on its margin, the price increase, and not to push the cost increase to the client, it has kept GLS quite aligned with the market trends. And if we look at the overall scope, GLS has around a 6% growth in volume in Europe. That is roughly what we have, and we anticipate for 25 as a volume growth in Europe. So we can say that GLS is quite stable in terms of market share in Europe, and it definitely cost them some pressure in the margin. If we deep dive on some countries, countries have performed really well. Typically, Romania, 26% growth, Czech Republic, 14% growth, Spain, 13% growth in revenue. And for all these three countries, we definitely expect that GLS has won market share. It's above the market average. France and Germany, they are above 6% growth, which is quite aligned with market average and probably even a bit higher than market average. That would suggest that GLS has won market shares in these countries. On the other side, Poland and North America, including Canada and US, GLS seems to have lost market shares with performance that is lower than the market average. If we talk about Royal Mail in the UK, here the volume growth, it's about 7%. So we believe definitely that Royal Mail increased a bit its market share on its domestic market, with a UK market that is expected around 6% in volume growth. So a bit lower than what Royal Mail achieved this year.
Okay, well, those are some very interesting insights into the detailed figures, also the comparisons with what you expect the market growth to be. Those obviously were the figures for their last financial year, which ended in March of this year. So the next question, I suppose, is if we look at the current business year, what would you see being the main trends and developments for Royal Mail and also for GLS?
Yeah, I mean, what we can definitely see and anticipate is the continuous expansion of the out-of-home strategy for both of them. Royal Mail already highlighted in the financial results that volumes on out-of-home were up by 40%. GLS mentioned a growth in the network about 30%. So here they definitely highlight the strategy to push more things on the out-of-home delivery network for both Royal Mail and GLS, and it's quite aligned with the fact to at some point keep up with the pressure on the price and continue their strategy of keeping market share on the different countries with that pressure on the price. So definitely this sounds as a strategy for both Royal Mail and GLS. Yeah.
So if we sum up for Royal Mail and GLS in general, would you say they're doing reasonably well at the moment? If you can give it a kind of summary.
Yeah, so definitely, I mean, what is in terms of market share, they are stable, so which is pretty fair. If you see the high competition that is rising on the market, particularly from new players, either they are retailers with internalization or out of Europe investment. So definitely pretty fair on that, but it has a cost. For the group, and the cost is a profit. So they keep their market share levels, but the cost is a profit, and for now they have to support the cost increase on their own and not to rebalance it to the client.
Right. So I think they continue to be trading in challenging conditions, as many companies are in Europe at the moment. Definitely. Baptiste, many thanks for the insights onto those two companies. And let's see how they progress this year.